Hello, dear YouTube friends and dear Bitcoin enthusiasts, and welcome to another episode of Equibit Crypto. Today, we are looking at the judgment day for Bitcoin, which will be the job report that is going to, this is the consumer price index. Let's see when the schedule of the release for the employment situation is due, and the next job report is due 4th of June, which is getting really close as we record this video. And let's have a look at what happened the last time the job numbers came out. This was at this date here, the 7th of May. What happened then was there was expected to be um, uh, there was expected to be 1 million new jobs in the United States. It only managed to deliver 266,000. And as this is deflationary, um, Bitcoin price raised on this news a little bit. Then we had the Elon FUD, but also we had the inflation number um, for April come out, and those were 4%, which is 2% over normal. And this also contributed, I'm pretty sure, for Bitcoin to fall. Um, but it's hard to say with this Elon Musk FUD at the same time, because many people think that, well, if the inflation is high, then Bitcoin is going to increase in price on the very short term. This is very wrong, because to understand why, this is very, very, very important, because this is the whole economy depends on this now. It only depends on what the central bank is doing. And this is what we said in our video in April about when the Bitcoin bubble will burst. Because the thing is, the fear of increased interest rates are going to make more of an outcome on the Bitcoin price than the fear of inflation. Because inflation really don't go that fast unless you are in hyperinflation. So as I said, the Bitcoin is a hedge against stagflation. It's not on the short term a hedge against inflation, because if we have high inflation, what happen is that most capital will flow into out of value stocks and out of cryptocurrency and into the bond market and interest funds. Yeah. So be very, very, follow this very, very carefully. We have the next inflation's numbers released the 10th of June, which is only like 10 days from now. So a high, let's just recap and say if the employment situation is getting better, if they get as many jobs as they hope for, that is bad for Bitcoin. That's very bad for Bitcoin, because then smart money and people who know what they're doing, they are going to pull their money out of crypto and sit and tech stocks and sit a little bit on the fence and wait for the Fed meeting to see if they increase the interest or not. If they don't increase the interest, then Bitcoin is going to go up. But we might get a buy the dip situation where people sell off their Bitcoin and uh, because they are afraid that the Fed will increase the interest and maybe stop buying government bonds that the Fed will stop buying government bonds, and then we will see a dip. And let's see where our next support level is at. That's all the way down here at 23,000. Um, there are some support here at 30. Um, so yeah, I would expect that this fear, if we get a good job report and high inflation number, that fear should take us down to about 30,000 and maybe as low as 23,000. But first, of course, we need to break the 30. The mechanics behind this is very basic. This is 101. Economics, macroeconomics, is that when the interest is low and there is no inflation and expectations, people are putting their money into things that might be something in the future, like tech stocks, like companies that do not make money yet because they do not get a good return on companies like IBM and other like consumer makers, consumer manufacturers that produce consumer goods. So all these established companies in when things close down and people save their money, and when the velocity of money goes down, when people keep their money instead of spending it, they are not making any money. So that's why people don't want to be holding those shares. They much rather say, all right, I might just invest in these growth shares like tech stocks, which might return me a high amount in the future. And Bitcoin is following the tech stock. That is on the short-term scale. But long-term inflation, like high inflation, after the interest rate have already gone up, that will be good for the Bitcoin price. But short term, the fear of an increased interest rate and increased inflation will drive the price of Bitcoin down. This is contrary to what many retail investors believe, but you have to understand how the big money think. And if there is high inflation and high interest rate, they much rather just preserve their wealth by buying government bonds, which is have like a guaranteed return. Right now, it's about 2%, which is not much. But if you can get a guaranteed 4-5% on your money and also be protected against inflation, many people will do that rather than risk their capital. So, that being said, we are now going to look at the Bitcoin price for the next few days, if there's a pattern here. And we have this very nice triangle, as you can see on the upper descending triangle. We have one touch, two touch, three touch. On the wig, we broke here, fake out, another fake out here, but we didn't close above. We opened above here, but we got resisted, and on the lower uh, boundary here, we have close within, close within, close within, four touches, and then some wigs breaking down, but just like a fake out. So that's the rule, is that we can have the wigs break our lines, but we cannot have the candle break our lines. So it's looking bullish because this is a very bullish pattern. Um, so if we can keep within here, close um, outside on the upside here, and then get the confirmation here, then our price target should be roughly, so say we break out tomorrow our price target should be this this high here. So almost 45,000. Um, this is the day before the job report get released. So I think a lot is going to depend on the job report. And just remember, if it's come in as a good job report, that is bad for Bitcoin. That is bad for tech stocks. That might be a little bit better for value stocks. And also, I believe that it will create some fear in the market until we get another statement from the Fed, who will say they will not raise the interest rate. They already said that they will not touch the interest rate, but still, I believe the market is going to be afraid that they eventually will do, with a good job report and high inflation numbers. And I all recommend to everyone to go and have a look at the video we created in I think it was in April. It's called "When Will the Bitcoin Bubble Burst?" There we go into more details about the same subject, because then you can know something that most people don't know. All the institutional investors know all this, and for them it's pretty basic stuff. But retail investors don't really know the difference between value stocks, tech stocks, and how the interest rate is affecting the flow of capital. So that is very, very, very important to know. So thank you all for watching today, and remember to subscribe. We are getting close to 1,000 subscribers now. And as soon as we get to that 1,000 subscribers, we are going to start give out more free stuff. So stay subscribed and hit that bell notification, and I'll see you all next time. And best of luck.